2, 3. The rain in Spain falls mainly on the plains. The ants in France stay mainly in your buns. All right, good morning, everybody. Welcome to Forex.Today. It is Thursday, December 8th, 2016. This is a very, very big day. The ECB has been preparing for this day for a very long time, and today they will do virtually nothing. But that takes a lot of preparation. What are they going to do? Interest rates are not going to go up or down, right? Really? All they're going to do is extend quantitative easing. But here's the thing. Quantitative easing in Europe came years too late and billions too small. And guess what? Not enough has happened. Huh. Well, what do you know about that yet? So what we're going to do is in a couple of minutes, we're going to get the actual headline announcement. And then, 45 minutes later, we're going to get a press conference in which they will completely outline how they will not do anything, even though they probably should. You know what I mean? And wow, it'll be great. So Euro has been strong lately because of the potential for a taper. But what's the headline? What's inflation in the Eurozone? 1% maybe? You know what I mean? Like, not hitting target. And they only have one mandate. Have you ever told that to your kids? I told you to do one thing today, just one thing, and you couldn't do that. Go to your room, druggie. Mom. Mario, you. All right. So without further ado, let's get the party started. It's going to be a great day. Thanks for being on my team. Life is beautiful, yeah. Yeah, hey. So welcome to Forex.Today. Let me remind you that trading is risky. Oh, yes, be careful. Trading is risky, not appropriate for everyone. No, no, no. Past performance, good or bad, is not necessarily indicative of future results. Stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. I do these sessions for you at Forex.Today every morning, 7:30 a.m. The overriding goal of helping you become a better and more successful trader as quickly as possible. Every Friday, I'm at FX Street for premium members. I'm also FX Speaker of the Year. And we're just seconds away. This is TradeTheNews.com.
Next year, just 3 months' time, and highly likely that the ECB will push it back. Consensus is for at least 6 months. The euro just trading around the 108 handle, 109.96 head into the data. Again, the 10-year Bund futures head of the decision is currently higher by 4 basis points, just above 0.38%.
Life is great, life is grand, life is good, life is beautiful. Ooh.
We're in the window now for the ECB rate decision.
They're late, bloody Europeans. Draghi's just finishing up a cigarette.
Unchanged across the board there for the interest rates. No surprises.
Woo,
ECB,
no change. Good job, Europe. That's Europe getting her done.
Non-monetary policy. The Government Council decided to continue the purchase under the program at the current pace of 80 billion euros per month. And is extending it to by 9 months to the end of December. So an extension of 9 months in the QE buying program.
9-month extension. Not a year, because a year could be insanely too much. All right, that is a huge disappointment. Look at the markets, just ridiculous, out of control. Stock market crashing, euro yen, euro dollar skyrocketing.
To the end of December 2017 or beyond. Euro up a big figure there, 108.60 there by the euro.
Just to recap, the ECB announcing an extension as expected. They are tapering the dollar or euro amount that they're going to buy, and we've seen an upward bias on the euro and in interest rates in Europe. The Bund future 160.31 down 100.
So they tapered, bloody bastards.
159.91 briefly there in the Bund future.
You guys catch that? They tapered, bloody bastards. What are they doing?
And the amount of 80 billion is going through March to the current timeline, and then after March to December, they'll cut it by 20 billion euros per month. Again, euros take an initial bid on that. It's off its best levels, 108.
All right, market totally missed it. They're freaking out. Now it's coming back. How funny.
France and Great Britain giving back most of today's gains. The euro stock still up about a third of a %.
All right, second chancers.
Back up across.
You may have already missed it.
Future again, briefly trading to a low 159.90. We've recovered 160.40 in the Bund future. The German 10-year yield now up about 10 basis points today, had been up about 4 to 5 heading into the announcement.
Yeah, they tapered next year, huh? So they're going to do more, less, more or less and more. They're going to do less for more. I mean, how did they get to that conclusion? What were they discussing in their meeting?
Dollar yen, consequently, as a little bit of risk off, moves through following the ECB announcement and decision to adjust their quantitative easing and extend it. Dollar yen 113.76, moving into positive territory. Gold futures have moved a little bit lower now, back into negative territory.
It's amazing, isn't it? We have decided to do less, but for longer. Oh, well, that ain't going to work. So with the euro going up, okay, clearly the market doesn't think it's the right decision. So what happens to inflation when the euro gets stronger? Inflation falls. You don't need as much money if your money buys a lot of things. Prices fall. All right, euro dollar all the way back.
Best level, still higher by 0.6. It's about
Euro yen little changed.
great decision, 108.60.
Yen pairs are straight up rocket ships.
German 530 curve steepened by several basis points to follow that ECB decision.
Pound yen up, euro yen up, Aussie yen up, Kiwi yen up, CAD yen up, USD yen up. Seems like some congruency there, huh? Yeah, Miles says, well, didn't Draghi want more inflation? Well, apparently not. They've decided to do less for longer. I just don't get it. Like, it's sort of like Japan raising taxes after, doing quantitative easing. Just doesn't make any sense at all.
Bond market a little bit lower following the ECB news. Your U.S. 10-year was down about a quarter of a point heading into the ECB announcement, down about half a point. The long bond
He's probably just upset about the Italian elections.
10-year yield backing up to 3.4%, up about 5 basis points on the day.
The euro dollar 100% retracement, so be careful on euro yen here. Now, I want you to go back in your mind. I'm not going to show it yet because we got a lot going on, but in your mind, remember what you were supposed to have done Sunday night or Monday morning when the market's open based on the swing trades. You're supposed to be long at the central pivot or the M2. Your stop would be at break even. And right now you're on your way to hitting targets. And you haven't really even worked since Sunday. It's Thursday and you're about to get paid, right? That's how it's supposed to be. Hey, so what do you do as a currency trader? Oh, I buy on Monday and I sell on Friday. What do you do the rest of the week? I read central banking reports. So we're, as you probably know, 38 minutes and 9 seconds away from Draghi coming out and tell us what the hell they're thinking. But seriously, how do you get to a decision like that? Like, it's not working out. We're not getting anywhere close to our inflation levels. And even though it's not a mandate, many European countries have 10% or higher unemployment. And it's been 10 years since the financial crisis started, right? So what should we do? I think we should do less for a longer amount of time. Why don't we do less for like another 10 years? Yeah, that sounds good. No. Trumponomics is going to save us. I mean, like, wow, like, how do you get there, right? How do you get there? Could you explain it if you were going to like write a school paper? Okay, be careful on that euro dollar, man, because remember, US dollar is the king, right? This is where you decide what you want to do. Do you want to sell the Japanese yen? Do you want to buy the dollar? Or do you want to do both? Pick your lines.
The euro, giving back all the initial gains following the ECB announcement, is now right back to where it was. Still slightly firmer for the day, but the euro give back. It's off almost a big figure from the best levels.
So it went from 109 to 108. Oh, 108 to 109, 109 to 108. Hang on a second. Someone might be at the front door. I have a worker coming, but not till later, but who knows?
We've seen both the DAX and the Euro stocks now break out strength.
Okay, dollar getting strong.
The ECB announcement now permeating through. We've brief blip lower in equity markets. Head fake as is usual following a major central bank event. And we're now seeing fresh highs across the board in European bourses, led by the financials. U.S. equity markets also catching.
You should see the S&P 500. Holy smokes.
Declines are much more muted here, and gains are much more muted here in the U.S.
It bounced not on daily support, not on 4-hour support, but it did bounce on daily on 1-hour support. S&P 500. Yeah, I don't know what it was. I have robotic security cameras around the house, so sometimes like deer walk by. I saw a 3-point buck on my front yard the other day, like 2 days ago. Beautiful creature. Yeah. All right, so dollar is getting a boost here. If you are a bull on the dollar, you're making money. If you're a bear on the yen, you're making money. If you're not either of those things, you're probably not trading. And if you're just chasing price around, then you're probably losing money. But again, this is something that we do talk about every day, right? Every single day we talk about this. You need to trade your bias, have a plan, have it written down before you even get to your charts. So again, if you're just chasing price around, you're probably losing money, and you will continue to do that until you change your behavior. So again, in simple terms, if you were a bear on the Japanese yen, and you were probably a bear yesterday, and the day before, and the day before that, 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 well, if you are today, you're probably making money. If you were a bull on the dollar today, you were probably a bull on the dollar yesterday, and the day before, and the day before, and the day before, and the day before, the day before, the day before, the day before, the month before, the month before, the month before, the quarter before, the quarter before, the quarter before. And if you're trading that right now, you're probably making money. Right? Am I right? No, you've lost sound? Did you get any of that? So USD yen going through 114. USD CAD heading up, it's through 132. Aussie dollar falling as you would think. Right? We made it through 75. Once again, Aussie yen up, CAD yen up, Kiwi yen up, pound yen up, euro now neutral with the yen. Euro dollar is down. It went from 108 to 109, back to 108, and we're now at 107.50. So it went up 100 pips, down 150 pips in 15 minutes. Pay attention to this psych level on the USD yen. I think it could be important. So a taper, huh? Still trying to figure this one out. What would go through their mind? Things are so good. I guess unemployment rate at 10% in Spain is good. Is that what they wanted? What's the unemployment rate in Italy? 10%? I think we looked at it. It was 12% or something. So that's good. Strange, huh? Strange. I wonder if it's like some backdoor deal with the Chinese or something. let's talk. Let's talk conspiracy theory, right? Because when it doesn't seem to make sense, then somebody's in on something, right? So what if they have a deal with the Chinese? The Chinese holding a lot of euros. So Draghi says, "Yeah, all right, we'll drive the euro up, and then you can dump your position, and the euro will crash again, and we'll get our inflation." I don't know. So rumor has it people, dealers, dumped it at the 50-day simple moving average. What do you think about that? Man, my village is being attacked. Someone had a plan. Well, yeah. And look how amazingly complicated the plan is. Sell at daily 50. Right? What are you going to do today? I'm going to sell euro at the 50-day. Right? What? Baltic drop? Wow. So all that Chinese buying up of commodities that we've been watching on the Baltic Dry Index, theory is that's over now. So maybe watch things come down. Can't be sure, but you probably got the Chinese data, and you noticed that there was a huge surge. But we already knew that because we were watching Baltic Dry Index. Okay, we're still stuck at 114 on USD yen. So if euro dollar falls, or sorry, if euro yen falls further, that's the euro getting weak because we know, generally speaking, the yen is weak, already weak. So then for euro yen to fall, then euro's even weaker. But I think we're getting close to some profit taking areas on these yens, right? So this is why you trade your plans, bro. So euro yen still above the 4-hour 21. He can still be a bull. It's okay. Right? Still be a bull. It's fine. So we've done a full retracement now on the news candle. But bear in mind, less quantitative easing does tend to strengthen the euro.
Ceiling to 50.7 billion euro, according to the Bank of Greece.
Still stuck at 114. I'm telling you.
Program.
USD CAD going up on the weekly support pivot. Remember, the top on weekly on USD CAD was weekly R1. So now that we're at the weekly S1, that probably should stop, and we should stay within that range. Which means any trend that, if a trend exists on that pair, then we are now consolidating or range bound by definition from R1 to S1. That's, those are inside weeks. Or you may analyze it and say, well, we've been in the range for a while. And you say, well, then we're still in the range. So you trade the range forever and ever and ever until it breaks out, and then you trade a breakout trade. But you never guess. Okay, yens are dipping. Have you decided whether you're going to buy some dips? Hey? 23 minutes and 21 seconds to the press conference. VIX at 1176. Life is beautiful. Ooh. Life is great. Life is grand. Life is good, yeah. It's getting messy, huh? Well, if you're a bearsy on oil, okay, you see a basic swing strategy. Yesterday's high, yesterday's low. So where's your sweet spot? Sweet spot is somewhere between the 382 and 618, which happens to be 5123, which is our top if you were going to head down. That gets us down to about 50 bucks. By the way, USD yen now back below 114. I called it. We went up to 114, stayed there. Now it's been about 15 minutes and we're just kind of staying there. So what is Draghi going to say? What an enigma. Less for longer. Just amazing, right? Well, it'd be very interesting to see how history treats all these things. So how do we get rid of populism? It's a bit of a danger in the United States, but not necessarily as, like Trump being a populist. At least he's a capitalist pig dog, right? So Europe runs the risk of going socialist again, like in the, the Great Recession of the 1960s and 70s, right? Is anybody old enough to have lived through that? Anyone go through the Margaret Thatcher days? So let's focus on the UK economy. You don't mind if we do some history while we watch these charts, do you? In the 60, well, let's say after World War II, the United States and UK became very socialist, and they were under very Keynesian economic systems of the government planning things, central government planning things, and they owned big industry. And it kind of makes sense, actually. On paper, it kind of makes sense that you should try to have open borders for business, right? For businesses but for industry like coal and steel and electric, the electric grid and stuff, you could argue that should be run by the government. And the reason for that is if you structure an economy, you have to make a decision. Do you want to open up your borders and have free trade? Because that does increase productivity, and it lowers costs and lowers prices because now you can import cheap things and you can export to others, right? But what if you built a steel mill or a coal mine? You don't want cheap imports. You spent $1 trillion building the mine or the smelting plant, right? Canada news, less than expected. Right? So anyway, so you can see, like, if you spent all this money to build a steel factory, you certainly don't want, the economy importing cheap steel from somewhere else. So industry wants closed borders so it can stay profitable, right? So how do you deal with that conundrum? Well, that's a lot about what the Civil War in the United States was about. And around the same time, the UK was battling things politically. Um, Same sort of thing. The pre-industrial revolution of the UK, they had to debate a lot of these things, and there was even an English Civil War. Right. So, what was the U.S. Civil War about? Slavery? No. Sorry. I know I'm probably going to get into political trouble over it. But what they were debating in Congress, for example, for probably 30 years, was the industry of the Northeast wanted closed borders because they were industry. They didn't want cheap textiles coming in from the UK. They wanted to protect it, so close the borders, right? But what did the South want? The South were farmers. They grew tobacco, they grew cotton, that kind of stuff, right? Well, you want to trade that with the whole world so you can get the best price. And that's what was being debated in Washington, D.C. for a generation. Okay? So what happened when the South seceded? One, Congress, recognized that the South had seceded and declared war on them. That was the first act. You know what the second act was? To close the borders. Trade-wise, trade barriers to protectionism for industry. Right? Well, the UK after World War II kind of did something similar where they said, well, we don't want to close the borders, we want to open the borders, but then that would hurt industry, so the government should just run industry and control prices. That worked for a while, But then all of a sudden you had, in the UK, you had 200,000 coal miners striking against Margaret Thatcher. Margaret Thatcher's like, well, your coal mines lose money. They're like, yeah, but what about our jobs? Well, what about your jobs? Right? Coal, let's make up a number, right? Is $1 a pound, but I'm paying you $2 a pound to dig it up. How long do you want to keep that going? So what you ended up seeing when the government was in control of these things is prices actually were high, and if you wish, customer service or quality or whatever was low in all these industries, right? And then but that's a mild form of socialism, if you will, where hundreds and hundreds of thousands of people have jobs that just simply don't produce very well. And that's not the type of populism that you want. So Margaret Thatcher had to go through strikes, right? 2 years or 3 years of strikes. How dare you lay off a coal miner? So what if Europe goes that way when you get it all comes down to what, you get economic stagflation or stagnation. Now you can get stagnation from, let's say, high prices and low productivity. Well, how do you get that? How do you get high prices and low productivity? You let the government do something. And the government usually, what they do is they cap prices. It's sort of like rent control. All right, rent is controlled. Rent's not very high. Everyone can afford it, except there's nowhere to live. Good job. Right, so you either kill your economy or you create a black market is the other way, right? So in this case, we have sort of this economic stagnation. But what happens if you get 10 or 20% unemployment? Right? What happens when prices stay, when there's lack of growth for not just a few years? What happens if it goes on for decades? We're well into our first decade, right? We're not well into it. It's about 1 decade. What if Europe stays like this another 10 years? What happens? Well, people get very upset, don't they? Like, give us jobs, give us jobs. We want socialism. We want socialism. We want free money. Give us free money, right? And that's not a good type of populist growth. Well, there's a lot of things that, Thatcher and Reagan, and they happen to be working at the same time. Moving off of the Keynesian model into a Hayekian model. I mean, it's not perfect, but, so you can't say it's all glory. But what ends up happening is when you open up free trade and you open up competition, that prices come down in a good way. Like, for example, you hear this all the time. Wages have not gone up in 30 years. Well, 30 years ago, you had to be rich to fly on an airplane because the government controlled, right? Controlled the industry. And so not very many people flew around 30 years ago. And when you did, it was expensive. But you got a steak dinner. Huh? Do you remember those days? Like, I'm on an airplane, I got a steak dinner. But what you don't remember is it probably cost you a lot of money to fly relative to your wages, right? So now everyone flies everywhere all the time. People complain about it, like, oh my God, it's Thanksgiving in the United States. I hate Thanksgiving. Traveling is so bad. Well, yeah, but everyone flies now. It's because it's cheap. There's lots of competition, and that drives down prices, and then that hurts profitability. So now companies have to streamline and then penny pinch and be incredibly super efficient. Yeah, but that's good. versus having no competition. You're Pan Am now, having no competition, prices are high, you know, you're serving steak dinners. Not many people fly because not many people can afford it, but it doesn't matter because you're super hugely profitable because the government protects you. You're not going to have any competition come in because it's all regulated. It's over-regulated. You can't be an upstart in an over-regulated industry. Right? So it's just kind of interesting. So what we don't want is Europe to go the other way and suddenly everyone wants to be a coal miner in the UK. I'm designing an economic system right now for my class at Harvard, and I want an entrepreneurial economy. Right? And an entrepreneur says, I want to think different and I want to be in a system that says, I can make a change, I can get involved, I can be the competition to the big or the slow or the obese, right? I can come in and be nimble and get into the market and be a little different, offer something a little bit different. And because of this risk and this investment, get involved in the industry, change the industry, and also because I took the risk and I got other people to take the risk with me, there will also be a return on investment. Okay, so that's the capitalist system. I have no problem with that, but if you do it right, that also creates jobs. And if you provide education to everybody, eventually that raises wages because you're not a coal miner, you're doing something a little bit better, right? But then people are going to argue, oh, well, you're going to have rich people in your system. Yeah, filthy, stinking, obscenely rich people. But you can tax them. It's cool. But what do you do with the taxes? That's much more important. And so I've designed a system that is awesome. But yeah, you do want people to take risk. You do want people to change the status quo. You do want better companies. You do want good customer service. You do want a Tesla company versus a traditional Detroit idiot company, right? Making crappy cars that nobody wants. Although I did see someone driving a brand new Buick LeSabre the other day. I'm like, dang, bro, a Buick. Yeah, well, you're right, but so that needs to change, right, Miles? And so my worry is if Europe doesn't get its act together, what will happen is it will stagnate itself into an uprising, and that almost always leads to war. But what else are you going to do? Like, I can't blame people to be upset if it's 10 or 20% unemployment. Like, when are things going to get good in Greece? You know why, a big reason why World War II took place? Because the Allies punished Germany for World War I. Yeah, well, oil, always oil, but really what happened, or on the economic side, is the winners, the Allies, raped and pillaged Germany after World War I and just drove them into deep, deep, deep depression. Financially, but also spiritually. You know what happens when you do that? Look at what's happened in the Middle East. Right? The Western world went in and raped and pillaged the Middle East. And then they're like, why do the Middle Easterners hate America? America hasn't done anything to, and they're like, really? You don't get it. Middle East is a hotbed of horrible, of war, because it was raped and pillaged for generations. So yeah, they're angry. So that's what happens, right? So anyways, now if you get decades of depression, if you will, or stagnation and high unemployment, you get alienation and people are disenfranchised, and and they'll say, oh, it's the bankers' fault. Well, it was actually the government got involved in right? So whatever. Long story short, the way you fix this, guys, the way that you fix it and make life better for Europeans is growth. You don't give people jobs. You design an economy that creates jobs, right? What's going to happen if everyone's a coal miner that loses money? Every time a coal miner goes down and comes up with a bucket of coal, the whole society has actually lost money. Oh, but he has a job and he can feed his children. Yeah, but at some point you run out of money, right? I mean, you just can't lose money all day, every day, over and over and over and over again. Try it in Forex, right? So what they need is to get their act together and do more faster, not less for longer, right? In my mind, like, what are they thinking? Japan tried less for longer. They're still in depression. It's been 30 years. Right? It's like, what would happen to South Africans if the government didn't steal money from the people all day, every day? It might be a better place. You need stable economy that encourages a sustainable perpetual system of growth, right? All right, so we got to get ready. So we got the thing coming up in 1 minute and such seconds. Let's zoom in on the press conference, if you don't mind. This may not work this way. I thought it would. It says please stand by, right? But I can actually see the video feed somewhere else and it's actually running. So I'm designing a capitalist system that also reinvests back into society, right? I wouldn't call it welfare, I would call it reinvestment somehow, or I don't know what to call it yet. Okay, here we go. So you guys see the video then? Or does it say please stand by? Or do you see actually Mario Draghi? Yeah. Yeah, weird, huh? So maybe the system can't do it. Let me try again. I've never run live video over the webinar. Hang on. Let's try it again. All right, well, let's do it the old school way. Can you hear that okay?
We will continue to make purchases under the asset purchase program at the current monthly pace of 80 billion euros until the end of March 2017. From April 2017, our net asset purchases are intended to continue at a monthly pace of 60 billion euros until the end of December 2017 or beyond if necessary, and in any case,
that is max.
until the Governing Council sees a sustained adjustment in the path of inflation consistent with its inflation aim. If, in the meantime, the outlook becomes less favorable, or if financial conditions become inconsistent with further progress towards a sustained adjustment of the path of inflation, the Governing Council intends to increase the program in terms of size and/or duration. The net purchases will be made alongside reinvestments of the principal payments from maturing securities purchased under the APP. To ensure the continued smooth implementation of the Eurosystem's asset purchases, the Governing Council decided to adjust the parameters of the APP asset purchase program as of January 2017 as follows. First, the maturity range of the public sector purchase program will be broadened by decreasing the minimum remaining maturity for eligible securities from 2 years to 1 year. Second, purchases of securities under the asset purchase
Euro dollars
program
dropped about another 100 pips.
below the interest rate on the ECB's deposit facility will be permitted to the extent necessary. The key ECB interest rates were kept unchanged, and we continue to expect them to remain at present or lower levels for an extended period of time, and well past the horizon of our net asset purchases. Today, extension of the asset purchase program has been calibrated to preserve the very substantial degree of monetary accommodation necessary to secure a sustained convergence of inflation rates towards levels below but close to 2% over the medium term. Together with the sizable volume of past purchases and forthcoming reinvestments, it ensures that financial conditions in the euro area will remain very favorable, which continues to be crucial to achieve our objective. In particular, the extension of our purchases over a longer horizon allows for a more sustained market presence and, therefore, a more lasting transmission of our stimulus measures. This calibration reflects the moderate but firming recovery of the euro area economy and still subdued underlying inflationary pressures. The Governing Council will closely monitor the evolution of the outlook for price stability and, if warranted, to achieve its objective, will act by using all the instruments available. Let me now explain our assessment.
Let me explain, Lucy.
Starting with the economic analysis. Real GDP in the euro area increased by 0.3% quarter-on-quarter in the third quarter of 2016, following similar growth in the second quarter. Incoming data, notably survey results, point to a continuation of the growth trend in the fourth quarter of 2016. Looking further ahead, we expect the economic expansion to proceed at moderate but firming pace. The pass-through of our monetary policy measures to the real economy is supporting domestic demand and has facilitated the leverage. Improvements in the corporate profitability and very favorable financing conditions continue to promote a recovery in investment. Moreover, sustained employment gains, which are also benefiting from past structural reforms, provide support for households, real disposable income, and private consumption. At the same time, there are indications of a somewhat stronger global recovery. However, economic growth in the euro area is expected to be dampened by a sluggish pace of implementation of structural reforms and remaining balance sheet adjustments in a number of sectors. This assessment is broadly reflected in the December 2016 Eurosystem staff macroeconomic projections for the euro area, which foresee annual real GDP increasing by 1.7% in 2016 and 2017, and by 1.6% in 2018 and 2019. Compared with the September 2016 ECB staff macroeconomic projections, the outlook for real GDP growth is broadly unchanged. The risks surrounding the euro area growth outlook remain tilted to the downside. According to Eurostat's flash estimate, euro area annual HICP inflation in November 2016 was 0.6%, up further from 0.5% in October and 0.4% in September. This reflected to a large extent an increase in annual energy inflation.
So they're maintaining their staff projections, which are missing their target.
Looking ahead, on the basis of current oil futures prices, headline inflation rates are likely to pick up significantly further at the turn of the year, mainly owing to base effects in the annual rate of change of energy prices.
So the Europeans believe oil prices are going to go up next year. That's what he just said in English.
The expected economic recovery,
Of course, I think they're wrong.
corresponding gradual absorption of slack inflation rates should increase further in 2018 and 2019. This pattern is also reflected in the December 2016 Eurosystem staff macroeconomic projections for the euro area, which foresee annual HICP inflation at 0.2% in 2016, 1.3% in 2017, 1.5% in 2018, and 1.7% in 2019. By comparison with the September 2016 ECB staff macroeconomic projections, the outlook for headline HICP inflation is broadly unchanged. Turning to the monetary analysis, broad money M3 growth moderated in October 2016 with its annual rate of
S&P 500 ready to make a higher high.
4% after 5.1% in September. As in previous months, annual growth in M3 was mainly supported by its most liquid components, with the narrow monetary aggregate M1 expanding at an annual rate of 7.9% in October after 8.4%.
Aussie dollar getting crushed off the monthly central pivot.
Low dynamics followed the path of gradual recovery observed since the beginning of 2014. The annual rate of change of loans to non-financial corporations increased to 2.1% in October 2016 from 2% in this month. The annual growth rate of loans to households remained at 1.8%. Although developments in bank credit continue to reflect the lagged relationship with the business cycle, credit risk,
Get ready. We're right on the top. Double top on USD or on S&P 500.
put in place since thereby credit flows across the euro area. To sum up, a cross-check of the outcome of the economic analysis with the signals coming from the monetary analysis confirmed the need to take today's monetary policy decisions so as to preserve the very substantial amount of monetary support that is necessary in order to secure a return of inflation rates towards levels that are below but close to 2% without undue delay. Monetary policy is focused on maintaining price stability over the medium term, and its accommodative stance supports economic activity. As emphasized repeatedly by the Governing Council, in order to reap the full benefits from our monetary policy measures, other policy areas must contribute much more decisively, both at national and at the European level. The implementation of structural reforms, in particular, needs to be substantially stepped up to reduce structural unemployment and boost
Commodity currencies still getting hurt.
euro area. Structural reforms are necessary in all euro area countries. The focus should be on actions to raise productivity and improve the business environment, including the provision of an adequate public infrastructure, which are vital to increase investment and boost job creation. The enhancement of current investment initiatives, progress on the Capital Markets Union, and reforms that will improve the resolution of non-performing loans will also contribute positively to this objective. In an environment of accommodative monetary policy, the swift and effective implementation of structural reforms will also make the euro area more resilient to global shocks. Fiscal policies should also support the economic recovery while remaining in compliance with the fiscal rules of the European Union. Full and consistent implementation of the Stability and Growth Pact over time and across countries remains crucial to ensure confidence in the fiscal framework. At the same time, it is essential that all countries intensify efforts towards achieving a more growth-friendly composition of fiscal policies. We are now at your disposal for questions.
Striking two questions, please. Could you tell us if any other options were presented in today's meeting? So what they were. Could you tell us, please, as well, whether the decision today on the extension design were unanimous?
Thank you. Yes, the two options that have been presented were the ones that have been studied by the committees in the preceding months. One foresaw the option of continuing with 80 billion euros a month for 6 months, and the other one is the one that that received a very, very broad consensus by the Governing Council.
Francesco Caneva, Reuters. So, when you decided to buy bonds with a maturity of less than 2 years, how do you plan to deal with criticism that there sees the ECB getting involved with governments' short-term financing needs? And the other question regards the buying below the deposit rate. In the minutes, you said, the chief economist, I think, said that any change would have to make economic sense. So what's the economic benefit of buying bonds that yield less than 40 basis points below zero?
Thank you. First of all, let me say that what I said it during the introductory statement, but it does need some emphasis. the purchase of securities under the asset purchase program with a yield to maturity below the interest rate on the ECB deposit facility will be permitted to the extent necessary. So it's an option, it's not a necessity. And as a matter of fact, the relevant committees will look in January and in the coming months when this could become a necessity. So it's more to sort of give an option for continuing a smooth implementation of the program than for any other reason. Now, on the general involvement of the ECB with financing needs of the governments.
Cool, everything good? Dollar's still strong across the board.
Alessandro Speciale, Bloomberg News. Mr. President, first of all, a question on the reduction of the pace of purchases from 80 to 60 million per month. Could you tell us why you felt necessary to ensure this second option is more sustained market presence? So what was the rationale for this decision? And the second one is you said that, as you just said, as to the extent necessary, possible to purchase below the deposit rate. The fact that the committees still have to study this, does it mean that this is not immediately an option? And what may be the conditions to make it necessary under? Are there going to be caveats? Are there going to be some sort of limitations to doing that? And what sort of instruction do you need from this? Thank you very much.
Thank you. Now, on the first question, first let me say that we have to go back to March 2016 when we upsized our program from 60 to 80. And at that time, the outlook for a return.
What do you think is weaker, euro or lira? Look at that. Lira is even weaker than euro. What? Euro's pathetic. But look at euro taking off versus Turkish lira. Oy vey, huh? Let's have some fun, son. Boom. You try. So Europe being very successful, ruining their economy.
The governing council intends to increase the program in terms of size and or duration. Now, this means two things. First of all, the governing council is acting in a pragmatic and flexible way to cope with risks that may materialize in this period of time. Second, there is no question about tapering.
By the way, the S&P 500 did not make the higher high.
Now, on the second
It
point,
touched the double top, but it didn't break.
Committees work on that point. As I said, this is an option, not a necessity, and the committees will assess when it should become so, when and if it should become so. As you know, the amounts of purchases and the maturities of purchases do depend on the current constellation of rates. And as this changes, so it changes the necessity to buy certain maturities rather than others.
It's from the Wall Street Journal. You said tapering hasn't been discussed today. How much longer do you think it'll be until that discussion had, Councillor, how much pressure is there to hold that discussion on this Forex? My second question is on Italy. There was obviously the no votes this weekend. How vulnerable is the country and its banking sector to a slowdown to a removal of these stimulus measures?
Thank you. On your first question, you see since the intention, underlying narrative of our monetary policy decisions was exactly to maintain the extraordinary degree of monetary accommodation that we have in place, and to this extent, without distorting price, will certainly continue to exist.
Thing is it going to come back now, huh? Feels like it's time for our pullback.
Deliver exactly the degree of monetary accommodation that we want. The second purpose is to transmit a sense that the presence of the ECB on the markets will be there for a long time. So a sustained presence is also the message of today's decision. And that's why tapering was not discussed. On your second question,
Yeah, stochastic 3
you asked me about
version 2.
I think that vulnerabilities that both banking
I
systems
found it right on MT4.
have been there for a long time, and so they ought to be coped with. I'm confident the government knows what to do, and they will be done.
Mr. President, you've underlined that the ECB can increase the volumes and duration of the program if developments change. Or does that? What does that mean? And does that also mean?
Is it giant green sweater day at the ECB? Is that what all the girls are wearing? I like your tie. It's subtle. Thoughts on USD yen? Yeah, up. Yeah, look at that woman. She's like, yeah, 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 it's true. It's true. That's what they're saying. It's tapering. Look at that up there on TV. I think it's Bloomberg. They still have the woman with the giant tie talking. There's at least a full minute delay on TV. This woman's dressed like Hillary. Has her Hillary suit on.
They supervision council's meeting and won't be able to go and discuss the situation of central banks. So my question is,
So this guy doesn't shave, and he doesn't wear cufflinks. Little casual, I'm telling you. I don't know where the world is going. Everyone is so concerned with their comfort.
as such that must be dealt with very quickly. Thank you.
Thank you.
Yeah, I'm not gonna wear cufflinks to the meeting.
To answer your question, saying ask the supervisory board for an answer.
What's the new normal on cufflinks? Weddings and funerals? Maybe?
Thank you much for this building title. Two questions. The first one, another option to safeguard the smooth functioning of the program would have been to
Now these three, they each asked a question. It must be front row or something, huh?
Simple. The 1.7% 2019 is that in line with close below the close 2%.
Pound dollar on 126, but it's also near a weekly pivot, isn't it? Or in a monthly pivot too. Be careful on pig dog.
Persist. And we know that there is a gradual convergence to that objective. And so that's the answer.
Yeah, I feel like the commodity currencies are going to have a bounce now. So watch your CAD, watch your Aussie, watch your Kiwi, or yeah, Kiwi. So if you were going to buy a commodity versus a yen, you'd open up a chart like this, and you would decide, right? Aussie slightly stronger than kitty CAD, so you'd be looking at Aussie yen for a long. Does that make sense? How you go boom, 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 boom like that?
By the same time, TradersWay remains low. So we have the situation of
Well, you couldn't possibly trade that combination, Kiwi versus dollar, but dollar's strong. So why would you trade anything against it? So there's just no way I could possibly even look at Kiwi dollar. Sorry. 'Cause if you're thinking buying Kiwi, because that's what I just said, buy a commodity currency, there's just no way in the world you would even consider Kiwi dollar because the dollar is strong. And you want to buy Kiwi, so that'd be the last thing you'd look at. So how about Kiwi yen? Because I've already stated I'm a bear on yen, right?
Over 3-year horizon. Now, on your second question, certainly as inflation expectations, if inflation expectations.
Oh, you say that says CAD stronger. Well, I'm looking at this candle. CAD has been stronger, or Aussie has been weaker. But right now, I have a green candle here, and I'm suggesting a bounce, so it hasn't happened yet. So I look at this and say, that's happening, boom, long. I'm just like, I see that, boom, long Aussie yen, if I had made all these other decisions ahead of time. A scalp, well, a scalp in. I tend to scalp into everything. But is it a scalp? No. If I went long Aussie yen, I'd either break even or make 300 pips, maybe 500. But I'm going to scalp in, of course, yeah.
After the US election, interest rates in the US have gone up considerably, and the dollar has appreciated against the euro. What does that mean for the ECB's monetary policy? Do you see risk of abrupt interest rate increases and spillovers to the eurozone? And my second question is on the legal questions. Mr. Mersch has recently said that the European Court of Justice has confirmed the legality of the monetary measures, provided that the self-imposed boundaries are observed. Now you change some of the self-imposed boundaries. Are you not fearing that this would again raise the yield issue? Thank you.
Thank you. The answer to the second question is no, because the self-imposed boundaries to which Mr. Mesh was referring are not the self-imposed boundary which we have removed today. Different things. The answer to the first question is it's very difficult to assess what the effects of these big changes, like the radically new administration, new way
S&P 500 getting ready to try again.
in the United States, or for this matter, even
Oh man, I didn't even notice what time it was. Guess we'll go a little longer. I'm running the video though, but we'll go a little longer. Mexican CPI 0.8, year over year 3.3.
markets and financial intermediaries prove much more resilient than people had expected them to be. So it's first of all we know one thing: markets were more resilient, and this is probably many reasons, many causes. One of which is certainly the
All we are saying,
regulators.
give markets a chance. All we are saying,
But there are also other reasons.
give markets a chance.
Context. But the point is that all these events, especially Brexit and the new administration in the United States, have effects that are, by their very nature, that are going to develop their full dimensions in the medium to long term. So we'll certainly see consequences of these changes, medium to long term. Not necessarily, as I was saying, in the short term, but these consequences are very, very difficult to assess now. So it's very difficult to assess what's the medium, long term consequence of a possible change in the US administration economic policy. But I should stress the possible, because we're still in a very early stage.
Alessandro Merli di Sole 24 Ore. You alluded in the last answer and also last week interview to the fact that political uncertainty is high, actually behind dominance. After the Italian referendum, is this concern heightened for you beyond market response? I'm thinking in particular of the need which you stress repeatedly of reforms. The country certainly needs reforms, and it's possible, it's probable that they will not be overcome in the country without the government and possible elections. So next few months.
I mean, when I referred at dominant political uncertainty, I was not saying something extravagant or difficult or unforeseen. Just look at the election calendar for the year to come. And so that is by itself a source of uncertainty. Look at the rest of the world. Look at what's happening with the emerging market economies. Look at what's happening also in some segments of the financial markets. So there is a big uncertainty, much of which is political, and whether we can do something.
Yeah, so I feel like we've hit the quiet spot. So why don't we pull the plug and meet up tomorrow? Right? It's only Wednesday, or is it Thursday? Oh my God, it's Thursday. Well, I guess I'll be at FX Street tomorrow. If you're a premium member, I'll see you over there. And if you're not, then I'll see you next week on Monday. Looking forward to reading all your trade plans and stuff. And we're going to roll into the big dog week, huh? Things are getting exciting, huh? And then the big push to the year end. Right? Could be a phenomenal 10 days, 10 trading days into the year. So, hey, man, peace on earth. May the pips be with you. May your profits be above average. Yeah. Hope you have a great week and great pips. I hope everything's going well. I hope this is your best December ever. Yeah. So again, thank you for your loyalty and being on my team and all that kind of stuff. I always look forward to our time together. I appreciate everything that you do. So I'll see you soon, huh? Thanks for being a client at TradersWay. Cheers.